Ever dreamed of squeezing every last drop of yield from your crypto? Well, Pendle might just be your secret weapon. This innovative protocol is revolutionizing yield trading, letting you split, trade, and optimize your returns like never before. In today's video, we'll dive into how Pendle tokenizes yield, opens up new trading strategies, and could supercharge your DeFi gains. So buckle up as we unravel the yield magic of Pendle and discover why it's making waves in the DeFi space. So what exactly is Pendle? It's a decentralized protocol that launched in June 2021 on the Ethereum blockchain. But its story starts earlier, back in November 2020 when it was first introduced under the name Benchmark. Pendle was created by a team of mostly anonymous individuals going by TN Lee, Nguyen, GT, and YK. These people saw a gap in the market for tokenized yield trading and decided to fill it. Now let's take a quick trip through Pendle's timeline. After its initial introduction, things moved fast. On March 20, 2021, they launched their testnet. Then, on April 28, 2021, Pendle held its liquidity bootstrapping event for the Pendle token. But the real fireworks started on June 16, 2021, when Pendle officially launched on Ethereum. In November 2021, they expanded to the Avalanche C-Chain, bringing their innovative yield trading to a new blockchain. A major milestone came on November 29, 2022, with the launch of Pendle V2 on Ethereum. But 2023 was a year of expansion for Pendle. In March, they launched on Arbitrum, supporting GMX's GLP token. July saw them go live on BNB Smart Chain. And August brought launches on both Mantle and Optimism. Each new chain meant new opportunities for yield traders. In January 2024, Pendle introduced limit orders on select pools in Arbitrum. Now that we've covered Pendle's journey, let's dig into how it actually works. At its core, Pendle is all about tokenizing yield. But what does that mean? Basically, Pendle takes yield-bearing assets, like those you might get from lending platforms like Aave or Compound, and splits them into two parts: principal tokens, or PT, and yield tokens, or YT. Think of it like this. If you have a savings account that earns interest, PT represents the original amount you deposited, while YT represents the interest you'll earn over time. By separating these components, Pendle creates new trading opportunities. The PT represents the ownership of the underlying asset. When it reaches its maturity date, you can redeem it for the original asset. YTs, on the other hand, represent the rights to all future yields generated by the underlying asset until maturity, in advance. But Pendle doesn't just split these tokens and call it a day. They created a special market where you can trade PTs and YTs. This market uses an automated market maker, which is a smart contract that enables trading without traditional order books. Pendle's AMM is designed specifically for yield trading, taking into account factors like time decay that are crucial when dealing with yield tokens. One of the cool things about Pendle is it supports a variety of yield-bearing tokens from different protocols. We're talking about tokens from major players like Aave, Compound, and Lido. This means if you're already using these platforms, you can easily bring your tokens over to Pendle and start exploring new yield strategies. Now, let's talk about some of Pendle's key features. The single liquidity pool for PT and YT trading is a big deal. It makes the whole process more efficient and can lead to better prices for traders. The auto-routing feature is another game changer. It allows users to deposit tokens that aren't directly supported by Pendle. The protocol automatically swaps these tokens for the correct yield-bearing asset behind the scenes. This makes the whole process much smoother for users. Pendle's governance model is also worth noting. The introduction of Pendle gives token holders a say in the protocol's future. By locking up their Pendle tokens, users receive Pendle, which allows them to vote on protocol decisions and earn a share of protocol fees. More on this in a moment. Speaking of multi-chain support, this is a key part of Pendle's strategy. By launching on multiple chains, including Ethereum, Arbitrum, BNB Smart Chain, Mantle, and Optimism, Pendle is making its yield trading opportunities available to a wider audience. Each chain has its own ecosystem and user base, so this expansion significantly increases Pendle's potential market. Pendle also offers various yield optimization strategies. These are designed to help users maximize their returns while managing risk. For example, users can engage in yield farming by providing liquidity to Pendle's pools, earning both trading fees and Pendle token rewards. Risk management is another area where Pendle shines. By allowing users to separate principal and yield, Pendle enables more granular risk management strategies. Users can, for instance, sell their YT to lock in a fixed yield, or buy YT to speculate on rising yields. Now, let's talk about what's been driving Pendle's recent growth. One major factor has been the increased interest in liquid staking derivatives. These are tokens that represent staked assets in proof-of-stake networks. As more users stake their assets, particularly ETH, the demand for ways to trade and optimize the yield from these staked assets has grown, and Pendle is perfectly positioned to meet this demand. Another growth driver has been Pendle's integration with emerging protocols like EtherFi. Users have been depositing EETH, EtherFi's restaking token, on Pendle as part of a strategy to earn points for an anticipated airdrop from EigenLayer. This showcases how Pendle can synergize with other DeFi protocols, creating new opportunities for users. The Pendle token is at the heart of the protocol's economic model. It's not just a governance token, it also captures value from the protocol's activities. The total supply of Pendle tokens is capped at exactly 235,890,444 tokens, with a current circulating supply of around 158 million as of late 2024. Pendle uses a hybrid inflation model for its token. There's a perpetual inflation rate of 2%, but this is balanced by various value accrual mechanisms. The initial token distribution allocated 37% to liquidity incentives, 22% to the team, 15% to investors, 18% to the ecosystem fund, and 7% to liquidity bootstrapping, with 1% reserved for advisors. It's worth noting that the team tokens were subject to a vesting schedule, with weekly emissions decreasing over time. The introduction of VE Pendle adds another layer to Pendle's tokenomics. Users can lock their Pendle tokens to receive V Pendle, which provides voting rights and a share of the protocol fees. This mechanism encourages long-term holding and active participation in the protocol's governance. Pendle's fee structure is designed to reward both liquidity providers and VE Pendle holders. The protocol takes a small cut of trading fees and yield fees, which are then distributed. For trading fees, 80% goes to VE Pendle holders and 20% to liquidity providers. For the yield fees, 3% is allocated to VE Pendle holders. Now, let's weigh up the pros and cons of Pendle. On the positive side, Pendle offers innovative yield trading opportunities that weren't previously available in DeFi. Its multi-chain support makes it accessible to a wide range of users. The protocol provides flexible strategies for yield farmers and traders, allowing them to optimize their positions based on their market outlook. Pendle's growing ecosystem and partnership are also a significant strength. By integrating with protocols like EtherFi and positioning itself to benefit from developments like the anticipated EigenLayer airdrop, Pendle is creating a web of synergies that can drive long-term growth. However, Pendle isn't without its challenges. The concept of tokenized yield can be complex for new users to grasp. There's a learning curve involved in understanding how to effectively use PTs and YTs. Additionally, Pendle's success is tied to the performance of the underlying protocols it supports. If these protocols face issues, it could impact Pendle. Like all DeFi protocols, Pendle also faces smart contract risks. While the protocol has undergone audits, the possibility of vulnerabilities can never be completely eliminated. Looking to the future, Pendle has some exciting plans in the works. The protocol has seen significant growth in total value locked and trading volume, indicating increasing adoption. The Pendle team is exploring new product offerings to expand their ecosystem. They're interested in developing money markets, leverage strategies, index funds, and structured products for PTs. They're also looking into vaults and auto-compounders for YT, PT, or LP positions. These developments could open up even more opportunities for users to engage with tokenized yield. There's also talk of a Pendle V3 launch, although details are still under wraps. Given the significant improvements brought by V2, the DeFi community is eagerly anticipating what V3 might bring to the table. Pendle stands out as a groundbreaking protocol in the DeFi landscape. With its innovative yield tokenization, multi-chain support, and unique trading opportunities, Pendle is reshaping DeFi's approach to yield management by offering higher potential returns. Thanks for watching, and subscribe for more.